post-Bernanke easing paradigm going to be, especially here in Asia?
Well, I don't think we're going to see that much change, to be quite honest, Tara. There's going to be a lot of time spent with very low interest rates, with still plenty of money printing from various central banks around the world, most specifically the Japanese, probably to a certain extent the Europeans. But it's just the markets are adjusting in terms of their expectations for money flows. It's not that the money flows have all of a sudden changed direction. Bear in mind, everything's falling. It's not just emerging markets, it's not just Asia. Everything's falling, from commodity prices to bond prices to developed country equities to emerging market equities. It's that realisation that the money flow is, to a certain extent, now becoming limited. And perhaps even maybe central bankers are beginning to think, maybe this wasn't such a great policy after all. And that's, the reality is now that they're going to have to rely on corporate earnings and real economic growth. There's not an awful lot of that around.
So we're in a risk-off era now. Does that mean tough times for emerging Asia for months to come?
That seems to be the way that the commentary is running just now, but you know, the reality is that emerging markets have been underperforming the developed markets for 3 years. So when people start talking about, oh, quantitative easing is disappearing as bad news for emerging markets, actually the reality is that quantitative easing has been bad news for emerging markets from day one. They have continued to underperform. Places like China have barely moved in the last 3 years. The US stock market, on the other hand, is at all-time highs. So this is a nonsense that it's all of a sudden change in emerging markets and emerging Asia. What is actually happening, I think, is really that we're now realising we've got to see what's happening with economic growth. We've got to look at corporate earnings. And our expectations of both are actually not that high. What we had really expected was high levels of liquidity, and now that expectation's disappearing. So that's bringing prices down. I think we'll level out actually relatively quickly over the next couple of months. And then hopefully the markets will begin to differentiate between where there is economic growth and prospects for profits and where there's none.
If we're thinking economic growth and even earnings potential, would Asia be better off than other parts of the world?
Absolutely, that's the reality. It's unfortunately the case though when equity markets get spooked, they just get spooked all over the place. Nobody differentiates between the Philippines and China or Mexico or Poland. They're all the same asset class and they're all the same country in the eyes of investors when the panic sets in. Once the initial panic phase disappears, then the cream tends to rise to the top. And I suspect what we're going to see is more of the same that we've seen over the last 5 years, and that's that Southeast Asia will do really well and outperform the rest of the emerging market universe.